morning to all traders. Welcome to this Thursday's Market Insights video provided to you by Orbex. Here, as if we don't have enough on our plate with COVID-19, an economic crisis, Trump taking a different stance against China regarding the outbreak. Now we also have UK/EU or EU/UK headlines coming back on the surface with another rift now for a potential cooperation in the fight against climate change as well. I mean, we have, of course, identified now that after 2 rounds of future relationship talks, the potential for a deal might be far reached. The 3rd round, of course, for the future relationship is taken next week, and there needs to be some clarity because in the summit in June, we really want to have some progress done on that end. Now we have the Bank of England reporting their interest rates today, and it's going to be a very interesting day for the pound. We've seen it fallen over the past few days. We've also seen the euro fallen over the past few days, and that was because, of course, the court in Germany threatened to block the central bank purchases, particularly for German bonds, of course. That could, of course, bring us to some long-running problems with quantitative easing with the ECB's quantitative easing program, and there are, of course, risks associated with the Eurozone in general. Now, the question that many pose is, was this decision already priced in, or going to see the euro falling lower? On top of the BOE decision today, we have Lagarde's participation in the Bloomberg webinar. So she's going to say things that are going to move the euro. So best opportunity for the day to talk about is the euro against the pound. And then I'm going to also, since we're on the minus, talk about the dollar against the Chinese yuan. So on the euro against pound first, revisiting after a while, we're talking about this being either an ABC or a 1, 2, 3, 4, and 5 opportunity, right? This wave over here, 1, 2, 3, 4, 5, was a leading triangle, okay? So we've had the correction over here, and here we've got waves 1 done. We're expecting wave 2, then we're going to get 3, 4, and 5. Or the other one is that this is this is primary waves. These are all primary waves, and the C correction, if it's C, of course, ended up here, and then we're going to turn lower, right? Now, if we assume that we are actually indeed in a correction, okay, we don't know what this will be. In the longer term, we will find out, actually. I'm looking at this as an first correction down to A, which is a 5-wave move to the downside, right? And currently, I'm expecting, this is wave A, this is wave B, and I'm expecting wave C to end. Now, this can take us near the 38 points of Fibonacci retracement of this move to the downside. That is around the 0.8986. Okay, and from there, start looking for prices to move lower. Again, the 50 Fibonacci extension of this move is around 0.8573. Now, I do support an upside over here, which means euro recovering some losses against the pound, because we have 2 signals here on the RSI. One is usual divergence, and one is the hidden divergence, okay? Hidden actually and usual, and this is down at this level over here. Okay, now this is a possibility. Other possibility is that this is an A, B, and a C. Okay, which means that we would have wave W over here, and then X and Y. Doesn't change much. It would just change, of course, the last move to the downside. However, by seeing this that way, comes to mind that this is 1, 2, 3. Wave 4 might be a triangle, okay? So if wave 4 comes up to that level over here, this current move to the upside to 0.88 psychological resistance, and then starts moving lower, we really need to validate that by breaking to fresh lows, because we still would expect wave 5 to come through. Okay, that means A would be posted at lower lows, then we would have probably a deeper correction because we'll be closer to 1, and then we're going to see prices going down to the maximum, the lowest of 0.8579. Okay, so a lot to take in for euro pound, but keep all these scenarios in mind. Okay, of course the favorable one is the one we are always talking about. Now USD against F1, we're talking about this being an A, B, and a C, so we're expecting wave C in the medium term, right? We talked about this being wave. Actually, we said 1, 2, 3, 4, and 5 we were expecting last week. It didn't happen, so we've got this 1, 2, 3, 4, and 5 over here as a leading triangle now, an ABC correction for wave 2, and now it looks like we're moving again down and likely to slide lower. However, there is one concern over here, okay? And the concern is that we don't see any signs on the RSI that are actually supporting the move to the downside. We're pretty much mixed over here, right? That means that we could see prices continuing higher, right? That would mean, of course, that we come and break to fresh highs. That would still make that an A. It's just, however, we'll probably have to look at this as a B over here. That would, of course, mean that we've had A, B, and C is going to be ending around here. That's 1, 2, 3, 4, and we're going to get a fifth wave up here, with this, of course, being considered as a fourth wave as a triangle. Okay, so in that case, we would look at this breaking the previous high at 7.1676. However, not break above the 7.1963. Okay, and from there, this is where we should be looking for prices to start moving lower again, because we are going to get a nice RSI signal as well, a divergence here that would support the move to the downside. So this will be all for the day. Enjoy the rest of the trading session, and I will see you again tomorrow.